Welcome back to the first trade. Let's look at what's happening in the FNO market. FNO 360 powered by 5 paisa. To begin with, and the Nifty is just flat 0.1%, but we're seeing some shorts getting built up in Nifty, with Nifty futures being at a discount to the spot. As we speak, Nifty Bank, if you look at, there is some activity happening at Nifty Bank as we speak. The Nifty Bank is also flat, but this there again we're seeing some kind of open interest position addition of 0.4%. Look at the constituents of Nifty Bank, and you'll get to see what's happening in individual stock, especially the two banks before the earnings. Nifty HDFC Bank is seeing a long build up, which as we speak, ICICI Bank is seeing shorts getting added. Their Axis is seeing a short covering. SBI, IndusInd, and Bank of India and Bank of Baroda are seeing some shorts getting built up there, while other private banks like Bandhan, AU Small Finance, and is seeing some either short covering or the long build up coming in. Look at what call and put writers are doing at this point in time. That gives you an interesting take. There's a good amount of put activity happening at 24,200 as we speak. The index is hovering about that level at the moment, and that's one of the reasons there. But if you look at the distribution chart, you still have 24,200, which is very active with respect to call writers, and the call writers have a higher position there. So watch out for that level. How the call writers are going to play in that strike, and that determines where the index is going to move from here on. But futures gainers include stocks which are active in today's trade, especially Cochin Shipyard, where there's a long build-up which is happening. Godfrey Phillips, long build-up is happening, and SGFC AMC, after the earnings, there is a long build-up happening there. So stocks up nearly 3.5% in today's trade. In futures losers, you have stocks like SGC Life down nearly 3.75%. Wipro is down after the disappointing earnings, and Persistent System is also seeing some short build up with the stock down nearly 2% in today's earnings. Open interest gainers include stocks in Godfrey Phillips is there, long build up. Cochin Shipyard is also seeing some long build-up coming in with 12.9% jump in open interest for Cochin Shipyard, and Wipro is seeing a short build-up with open interest up nearly 6.82%. There, among the losers, you have stocks like Nalco, where there's a long unwind happening. Avenue Supermart, there's a short covering coming in, and Colgate is also seeing some kind of short covering coming in. So FMCG seems to be FMCG retail seems to be a place where there is some kind of buying coming in and at this point in time. But look at what most active. ITC 310 April call, 51.38 lakh contracts getting added in that. It's one of the most active calls at this point in time, with the premium up nearly 1.6. It's at 3.45 as we speak there. Among the put, you have Wipro, which is most active put, 200 April put. The stock hovering just below the 200 mark, despite the fact that you have a buyback at 250. There is 20.13 lakh contracts which is getting built up at 200 strike for Wipro. So these are the two stocks which are very active. ITC has certainly become very active, and Wipro, after the bad set of earnings and a buyback, is active at 200 strike. So that's the update here. Aisha, we're still on a flat market.
Okay, that's a flat market, but a lot of individual stock-specific action. Well, let me now welcome on board and talk about the state of the economy and, of course, the state of world affairs. Who better than Swaminathan Iyer, consulting editor, ET Now, joining in on the show to talk about exactly that. Swami, great to have you on ET Now once again. How is it that you see India in the current West Asia crisis, and what's the impact that you're assessing for India at this juncture?
Look at the broader thing. The broader thing is that Mr. Trump is in trouble at home. He's in trouble because the war is unpopular. The prices have shot up in the case of petrol by about 33% and diesel about 25% in the USA. This has directly hit the consumer on the car, and it is gradually affecting transport costs, the cost of all petrochemicals, plastics, the entire logistics, everything is the aluminum has shot up, the natural gas. So many things have gone up. The Gulf has been critical, not just for oil. It equally, they're an important producer of aluminium, of a number of petrochemicals, of a number of plastics, helium, all of these things. Now, the world has reserves and people have stocks. Now, stocks are being run down, people are cutting taxes everywhere to try and cushion the impact on the consumer. This can continue only for a month or two. After that, the real shortage will sink in, the inflation will rise. If that happens in the USA, that will sink Mr. Trump's chances in the November congressional midterm elections, where he looks like almost certainly to lose the House of Representatives and may even lose the Senate. And if he loses both those, then the two together can cripple his attempt to do all kinds of things. Right now, Congress has been with him. So, he has been allowed to do all kinds of executive acts without the Congress coming in. But if the Congress tries to stop him, he will get into very serious trouble. So because of this, I think Mr. Trump wants to get out of this as soon as he can. Because of that, I would foresee a fairly imminent resolution of this within a week or two. Mr. Trump will either declare victory and leave, or he will find some kind of formula to get out. And I think he may even go, if Iran wants to charge $1 per barrel of oil going out, he may even go along with that. In fact, at one point he said that, I'm also policing the Straits of Hormuz, allows him to, why don't I also charge a certain amount and share this with Iran? So I foresee that this particular problem that has hit us and is capable of becoming very serious if it continues, I foresee that this will end fairly soon.
Swami sir, you've seen multiple shocks like this, but going by your experience, do you think that this time the kind of shock we are seeing is slightly different?
If this is resolved fairly soon, it will turn out to be a minor shock. I mean, the shocks of 73, 74, the price of oil quadrupled. We went up 4 times. Right now, it's only up about 50%. So relative to that, it is really quite modest. Again, that stayed for a long time with Saudi Arabia acting as the swing producer. And then the Iran-Iraq war came along and pushed the price all the way up the 30s, almost $40 a barrel. From it used to be $2, $2.50. From there, look how high it went. So right now, the shock is nothing like that as much. Secondly, we are now a much advanced country. There's a resilience in our economy today, which was not there. In those days, we immediately had to run to the IMF for money. That is certainly not the case with us today. So we are a strong and resilient economy. We have been able to take shocks like COVID. We have been able to take shocks like the Great Recession, the dot-com bust. We have taken all these in our stride. Right now, this is not a problem. Suppose this thing continues for another 3-4 months, the impact will really be very, very harsh. Our dependence on the Gulf for liquid petroleum gas, liquid natural gas is extremely high. We are very vulnerable there. And many of those industries based on those have been hit. The price of fertilizers has shot up the world over. It's going to affect farming everywhere. It's going to affect farming in India. But, provided we are willing to increase the fiscal deficit by 1 or 1.5% of GDP. And that is politically possible. I mean, an economist will say this is not a good thing. But politically, it is possible to say, let us increase the fiscal deficit by 1.5% of GDP to take care of the macro effect of this particular shock. GDP will fall by whatever it is, 0.5% of GDP, 1% of GDP. These two together, if we return to normal in 6 months, I would say that we have taken the shock not more or less in our stride. And if you look at the stock markets, even in the USA or in India, the stock markets are saying all is well. We've had a hit, but we've taken care of it through various short-term measures. And yes, GDP will take a hit, fiscal deficit will take a hit, inflation will take a hit, but at the end of it all, we will get through it. And if indeed I'm right in thinking that this is through in a couple of weeks' time, then I think, this time India will take care of the shock with its newfound resilience.
Right. And what's the kind of inflationary shock that you see on MSMEs or second order businesses, even if this war situation settles as per long-term analysis?
Absolutely correct. The second order impact is going to be significant. I mean, anybody right now who's been using LPG or LNG as a raw material is in trouble. From the fertilizer plants down to ceramics and various other industries. And those prices are not going to come down quickly. Qatar has suffered substantial damage, and it says up to 5 years it will take to repair those fields. So since our dependence on Qatar is so heavy, I'm afraid some of those things, that second order effect is going to be there for quite some time. The case of fertilizers, it's going to go up. There will be a pressure, therefore, for raising all the food, the minimum support prices. I think all of them will have to go up to support this particular thing. Inflation overall, if it goes up to 5%, 6%, there will be implications that many states are raising their minimum wages. In the case around Delhi, I think it's gone to 22,000 a month. The second order impact is very much there, and I foresee inflation going well above the 4% central rate that the RBI is happy with. So there will be an impact regardless, even if things are, even if the West Asia comes to some kind of resolution within 2 weeks. The second order impact on certain industries will be very significant, and we will see it in the next 2 quarters, maybe even beyond. I had not mentioned aluminum again, that the prices have shot up because it's a significant producer. So, that will affect all the downstream industries dependent on that. So in sum, a large number of second order impacts will be there. The balance sheets of companies in those areas will be hit. How quickly they will recover, let us see.
Swami sir, do you think the government has the leeway to expand the fiscal deficit at this point in time, and do they have because they've been quite disciplined with respect to fiscal deficit and pegging the entire fiscal deficit, entire borrowing to debt to GDP. So do you see that fiscal deficit can be expanded here?
They have the leeway politically. I think politically, the BJP, the NDA is very strong right now. Even if it does not do very well in West Bengal, Kerala, it doesn't matter. So I think BJP is sufficiently strong politically, so it can afford to go for a significant rise in the fiscal deficit. It can also afford to inflict pain. I mean, this business of not increasing petrol and diesel prices, I mean, without doubt, that will have to be done. It will surely happen after the elections. I think everybody agrees that Mr. Modi is not one for infinite subsidies. He has always been very clear that where to rein in the subsidies. So I think we can look forward to very significant increases in prices of many things once the elections are over. And even despite that, there will be a significant hit to the fiscal deficit. I wouldn't be surprised if it exceeds instead of 4 point whatever it is, 4, if it's 5.5 for 1 year, I would not be surprised. And in these circumstances, as I said, I do not think the RBI should be in the business of cutting rates. Quite the contrary, perhaps.
Right. Swami, always a pleasure having you on the show and getting in all that insight from you. Good speaking with you. Okay, on that note, let's take a very quick break. When we come back, we'll address the fall that Wipro is seeing after its numbers. We've got Piyush Pandey, Senior VP from Centrum, joining in on the show in just a bit.
Welcome back. You're watching the first trade, and we have now joining us Piyush Pandey, IT analyst at Centrum. Piyush, hi. Take us to your first take on Wipro. It seems that they're not able to get this entire growth phase going, and they've been struggling with this for now multiple quarters now.
I would say the growth was slightly below estimates, and they have been doing good amount of TCVs, but TCV to revenue conversion has been weak for last several quarters. And more importantly, I would say this quarter, the guidance for Q1 next quarter, like Q1 FY27 is very muted at -2 to 0%. And even the deal TCV were below estimates. So of course, there are sector level challenges, but for Wipro, growth has been, I would say, below industry top tier average rate. So concerns remain like about this turnaround. Yeah.
One is wondering is, what happens next when HCL Tech reports its numbers on 21st, or Tech Mahindra the day after that, and then Infosys followed by both those. After, TCS's strong TCV, Wipro's revenue miss, what do you think is the single most important factor that investors will look out for from the other three?
So I would say this quarter, CC growth will be muted across companies, and rupee depreciation will be the key driving factor for annual reported growth. More importantly, I would say the guidance in terms of growth for next financial year, deal TCV booked, and especially like say AI-linked deal TCV is something which companies can guide for, will be helpful for the investors. But I would say in the near term, the deflationary impact due to AI remains, and companies are facing challenges on account of that. So we see that. So what we see that FY27 can be very marginally better than FY26, and so most of the IT stocks they have got derated. But I would say mostly I would say what these companies guide for their deal booking. I think those are the key metrics to look out for in the coming results.
Piyush, the street has been rotating into IT as a geopolitical safe haven and a hedge against a lot that's happening in, supply chain dynamics, into the oil markets as that. But at the current valuations and after the recent sporadic moves that you've seen in some of these names, is the risks reward still in favor of IT after what we've seen in terms of an earnings performance from both TCS and now Wipro?
See, I would say most of the downside from, say, current demand challenges are mostly factored in the current share price. So I would say at the current price, it makes sense to add on to increase weight in the IT sector. But I wouldn't recommend anybody to go completely overweight. So it can be done in a gradual way. But I would say the sector still faces challenges with regard to earnings growth. And even for FY27, we feel that any improvement would be gradual way. So plus, what we are hearing is that clients are now taking more time for signing new large deals, and AI-related productivity gain sharing also remains a concern. So for I would say IT has been facing multiple challenges. First, it was like say macro challenges, then like say AI-related concerns, then tariff issues. So I would say at the current price, we have seen good amount of rally over the last say month or so. And so one has to be very selective, the stocks in the IT sector.
So what kind of growth are you penciling in for the entire IT sector in FY27? Is it a flat one, or is it degrowth on the top line front, maybe helped by currency devaluation or currency depreciation? And from a profitability point of view, do you see flat profitability going ahead for them?
See, we are building close to 3 to 5% CC growth. And on top of that, you would have, say, around 300 to 400 bits of rupee benefit on account of depreciation. Margins should stay broadly flat. So I would say now, I think market is factoring a very limited growth for the next financial year for FY27. And now it looks like, say, how recovery happens. Like so, I would say commentary on, like, say, their AI-led revenue and AI-led deals. That is something because there is a feeling that internet companies have underinvested in AI. So in terms of investments and in terms of AI-led revenue, if they can give more colors and the pace at which it is growing, That is something which will be like, say, we are looking for.
Right. Okay, Piyush, great to have you today on the show, and thanks for accommodating our request. Nice of you. Okay, and as we wind down then on this edition of The Market in First Trades, the latest episode of the interview, I chatted with Dream Sports' Harsh Jain, talking about expanding their playbook beyond gaming with a sharp focus on AI and financial services now. He also, of course, added that Dream Horizon aims to boost India's sports economy, wealth management, while the fintech arm, Dream Money, is building AI-led tools to help users manage their wealth as well. Also announces the launch of Dream Street, which is going to happen this month itself, and a new offering. That's going to be rather a new offering with a clear focus on expanding access for users beyond metros. Take a look at a slice of that conversation.
We had a few fundamental thoughts about what we want to build and why we want to build. And I think right from our Honorable PM's vision of India to become a much larger sporting nation, we believe the way we can contribute is build the digital sports economy in a much larger way. And there we've built FanCode and Dreamset Go already running. Dream Cricket, our AAA mobile cricket game, has over 25 million users. That's already going. Dream 11 has pivoted. Now with Dream Play, which is our sports AI, and with Dream Horizon, we are helping that entire sports economy to grow aggressively. Then we looked at what are the other problems that we can solve in India with our user base. And we said fintech has two large problems that we believe we can solve, where being AI first today actually disrupts the space.
How?
And those are wealth management. Now in India, if you're into wealth management, if you are a person that earns less than 1 crore, you literally cannot get anyone to help you with your wealth. Because wealth management was very high touch and personalized. And so it means that the
ticket sizes are much larger.
The economics only made sense if you have 1 crore to manage, right? If you don't, then I can't help you. With AI, we are able to take our 300 million user base and say, even if you have 1 lakh, 50,000, we're starting with 100 rupees actually. Even if you have 100 rupees a day, let us help you manage your wealth. Let us take AI and give the same level of service in a personalized manner to every single individual in India and grow that financial inclusion. And this message comes right from the top again. Our government is has been pushing very hard on financial inclusion. We have the user base, we have the brand, and we've seen great feedback from our users that we believe that you can actually help us. The other place in fintech was equity markets. Such a large portion of our user base has never dealt in equity markets, is scared about getting into it because they don't feel knowledgeable enough. They want to, but they're worried. There's another large chunk of people who've tried it out and they didn't know what they were doing and they immediately lost money and they retreated. That user base is never helped by people. They work on tips or some random information. But what if every one of them with AI could have a Goldman Sachs, Morgan Stanley, JP Morgan analyst sitting with them, telling them what to do with every event that happens in the world at every point of time, specifically for their use case. So we want to build AI advisory for the masses, right, in a personalized way so that we can actually help millions of people to do much better in equity markets, which is usually information and advice that's only retained for the top. We want to level the playing field, and that's why we believe we can add a new dimension to the market, use our user base, use our brand, and build an AI-first solution for India.
So you're officially acknowledging that Dream Street is happening.
Yes, yes, I am.
How soon is that?
This month, I think by the end of the month, you will see us launching into public.
Wow, what a market to launch this in.
It'll be fun.
And I'm just really excited. But so give me an example actually more for the viewers. When you say a Morgan Stanley, JP Morgan analyst sitting with you, what's the depth of AI assistance that investors can see?
I think once you download Dream Street, you'll have to figure that out.
But you know, with this entry that you're making right now into stockbroking, is that how I term it? Yeah, AI-led stockbroking. You're walking into a marketplace which is very, very crowded with some very aggressive competitors out there who are sitting on big volumes. Your Grow, Zerodha, Angel One, which is already dominant, and then there is Cred, MobiKwik, and many others in the fray as well. Why this and why now?
I think this is something that, again, we looked at what are the large problems we can solve. Also, what is our company DNA? We're looking at industries which are digital first, which are less offline heavy and more online, because that's our DNA. We're good at tech. We're good at digital first. We have a great talent, team that can build products for the masses in India. We have a user base of 250, 300 million users. I think all of these put together points to this market having a problem that we believe we can come in and solve. And I think really strong AI advisory for the equity markets doesn't exist. And none of the current players have access to a user base which they have data of, which they know are the kind that would like this kind of market, but they don't know whom and where and when and how. We do. And so we do believe that we have an ability to reach users with our brand and say we're here to help. We're here to help the little guy. We're here to help level the playing field. And we're here to make sure that as many more millions of people enter the financial markets protected with AI advisory to ensure that they get the best out of it.
So the differential factor, if I've understood correctly, is AI is going to do the heavy lifting.
Absolutely.
Okay. So Dream Street, from what I gather, is targeting retail investors in tier 2 and tier 3 cities. Is that's where you sense the large volume will come in from?
Yes, that's what I was saying, that 80% of our 300 million users were from tier 2 and 3 cities for Dream 11 and our group. And that's the untapped market. I think the tier 1 market is already tapped,
saturated,
like you're saying. Zerodha, Grow, Dhan, Angel One, all of them have already tapped into that.
So would you say that this is going to be sort of a distribution play which is going to be addressed as a fintech product? Is that the bid?
No, I think we're here to solve the problem directly of investing in equity markets and giving people help there. So distribution, I would say, is our competitive advantage because we have it. We already have 50 million users active on Dream 11. So to them also, we'll obviously market this heavily. But I think the product has to speak for itself. Finally, if you have to add value to people's lives, you have to solve a problem for them.
And this is going to be such a critical one, you know.
Absolutely.
Informed investing. I think that's where the need gap is. So Dream Money for wealth management, Dream Street for stockbroking.
That's it.
What's the financial investing stack looking like in your head? I'm wondering what's next.
I think, no, that's it.
That's it?
That's it.
Okay.
We have 8 different business units, 4 which already existed and 4 which we started new. And I think that's more than enough. Even in our distributed system where we have each one led by founders, CEOs. And we're essentially like a private equity shop that allows professional founders and CEOs to lead the way. I think that's more than enough for now. We have only a limited amount of capital, which you want to get these businesses from 0 to 1 and hopefully 1 to 10. And then they can always spin off and continue their journey and keep growing and keep solving for India.
So all approvals in place for Dream Street?
Yes. That's one of our, make in India for India. A couple of them are make in India for the world, like Dream Play, which is a sports video AI. But I think our greatest competitive advantage is our Indian user base and our Indian brand recognition and recall. So we definitely want to just focus on solving for India right now, solving for Bharat more so.
Would you say you're a techie at heart?
No, I'm actually, I am an engineer by profession. But the last line of code I wrote was 22 years ago.
Now you don't need to. AI
and now
does
I'm
that
actually
for you.
building. No,
Yeah.
really, I am actually building on Claude. I've been going and building with natural language, and it is just
Fascinating.
unbelievable to
Yeah.
be able to build using just regular English. But I'm a product design marketing guy.
That's interesting. Okay, so fantasy sports or live sports? This is the rapid fire, by the way.
There's no fun in live sports without fantasy sports.
Okay, I wanted you to gut call or data call?
Gut call when creating, data call when you already have, a running business.
Hardik or Rohit?
Oh man, come on! How can? That's not possible to answer.
You don't get
Sachin.
Okay. Creator economy or traditional media?
Create economy.
Okay. One sport you wish Dream Sports was bigger in?
Football.
The 2028 LA Olympics, attendee or broadcaster?
Broadcaster.
Okay. So you're not attending it.
Definitely attending it.
Regulation, friend or foe to innovation?
Two.
Innovation.
I think, honestly, I truly believe both. It can be both because I think for disruption, pure disruption, regulation will slow it down. For industries which are already regulated, that regulation is very much required to spur more innovation.
Last match you watched alone that you wish you hadn't, considering you hate watching matches alone?
Almost every United match. I'm
Yeah.
a die-hard Manchester United fan.
Okay. One company outside India building something that you genuinely envy as an entrepreneur?
Claude. I mean, there cannot be any other answer right now.
If you weren't building Dream Sports, what would you be doing?
I would be building something probably in the animal industry, the pet industry. Pet care is far from ideal today.
Dream pet.
Dream pet, okay.
Dream paw. Dream paw.
If I wasn't doing dream, then I couldn't use dream.
Yeah.
So then something.
Is the
some
dog
other
called
name.
Dream?
No, the dog's called Coco.
Okay.
And
What
the
a
next
too
we're getting
obvious.
two dogs, Coco and Loco.
Well, great chatting with you, Harsh. Thank you so much, and may there be many other dreams in the dream bouquet.
Thank you, Aisha. Thank you so much for having me.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है, यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century ProWood.
The biggest news break of the day. Exclusive that set the primetime agenda. Bringing you stories that matter. News breaks that shake up the system. Join us for the biggest revelation on Blueprint exclusive weekdays at 6 p.m. only on Times Now.
When power evades answers, when spin clouds the truth, One voice cuts through the noise.
When the nation wants to know, it demands the truth, not theatrics. Follow the facts, unfollow the fakery.
The nation wants to know. Weeknights at 7 p.m. only on Times Now.
The biggest news break of the day. Exclusive that set the primetime agenda. Bringing you stories that matter. News breaks that shake up the system. Join us for the biggest revelation on Blueprint exclusive weekdays at 6 p.m. only on Times Now.
When power evades answers. When spin clouds the truth. One voice cuts through the noise.
When the nation wants to know, it demands the truth, not theatrics. Follow the facts, unfollow the fakery.
The nation wants to know. Weeknights at 7 p.m. only on Times Now.
The biggest news break of the day. Exclusive that set the primetime agenda. Bringing you stories that matter. News breaks that shake up the system. Join us for the biggest revelation on Blueprint exclusive weekdays at 6 p.m. only on Times Now.
When power evades answers. When spin clouds the truth. One voice cuts through the noise.
When the nation wants to know, it demands the truth, not theatrics. Follow the facts, unfollow the fakery.
The nation wants to know. Weeknights at 7 p.m. only on Times Now.
The biggest news break of the day. Exclusive that set the primetime agenda. Bringing you stories that matter. News breaks that shake up the system. Join us for the
Hi there, good morning. You're watching Midcap Masala on ET Now. I am Snehi Shah, and today with me on the show is my colleague Ashesha Advaryu. And this is a show where we are going to take you through everything that's happening in the broader end of the market. The next 30 minutes are also going to focus on market developments in the mid-cap and the small-cap space, the stocks and sectors that are standing out right now, and more importantly, conversations with managements with companies in the mid-cap space. So before we do all of that, let's just quickly take a look at what the market is up to right now. Good recovery coming in on the Nifty from the day's low. We're now around that 24,280 mark. We had briefly surpassed 24,302, but we've receded once again. The broader end of the market, however, is holding up quite well. It's more than a 1% uptick for the Nifty small cap and about a 1% uptick for the Nifty mid cap index. So once again, the trend continues where the broader end of the market is supporting the index and rather outperforming it too. But before that, before we move on to corporate conversations, let's just take a look at some of the top headlines and the stocks that are buzzing from the broader end. And first up, let's talk about BST Industries. The cigarette maker is skyrocketing in trade after reporting a very strong Q4. Revenue rose 52% with PAT and EBITDA margins doubling on a year-on-year basis. Cigarette volumes also grew 3%, indicating strong growth. Colte Patil 2 is soaring in trade after reporting strong Q4 operational update. The real estate company reported sales of 714 crores, an increase of 13% YOY, and record collections of 830 crores, an uptick of 18% on a year-on-year basis. Quarterly sales too grew by about 18% sequentially, driven by strong response to new launches along with portfolio-wide sustenance sales. And Rail Vikas Nigam, or RVNL, has emerged as the lowest bidder for a project awarded by the East Coast Railway involving the construction of key railway bridges on the Bhadrak-Viziangaram section. The project is worth 968 crore rupees. Angel One also reported a good set of Q4 earnings driven by strong client activity and operating leverage. The client base grew 21% YOY with number of orders at 43 crore. Profitability also saw an uptick of 20% on a year-on-year basis. And Nisrec Heavy Engineering has entered into an MOU with the National Sugar Development Council of Nigeria to provide technical support for the development of sugar plants. It's a positive development for the company. And Alembic Pharma received final approval from the US FDA for its generic version of methotrexate injection used in treatment of different types of cancers and arthritis. Okay, on that note, let's take a deeper dive into what the broader end of the market is doing. Just pulling up the Nifty 500, which looks good right now, seeing an uptick of more than 0.5% for that index. And some of the top gainers from that index are MMTC today, up 13.5%. You have GSPL, Gujarat State Petronet, has been doing really well today. It's up 9.25% as we speak. The entire railway pack, you had news on RVNL like we spoke about, but other than that, Ircon is doing very well, up 8.5%. Ola Electric, once again after a little bit of a slump, has started to gain again, 8% higher over there. Engineers India, Aegis Logistics, Colgate, Emami. So it's in fact some of the consumer staples are also doing very well from the broader end. What's not doing well, however, is GMDC. There's a 3% cut over there. Gallant Ispat, after a 15 to 20% uptick yesterday, is now seeing some profit taking, a 3% cut on that one. Then you have Afcon, Sonata Software, some of the top gainers yesterday on the back of volumes are seeing profit taking today, as has been the case with Uno Minda, Inventurist, that's IKS, Persistent Systems. All of these are slightly lagging. If I take a look at what's happening sectorally right now, you have a mixed bag with IT and metal seeing nominal cuts, but other than that, it's the Nifty FMCG index that's doing phenomenally well. It's a 2.5% uptick on that front, led by gains in Colgate, a 6% move over there. Emami is up 5%, so FMCG is the outperformer today, and IT and metals are slightly lagging. But Ashesha, let's get into conversation with the management of Sharda Cropchem.
Well, yes, and we have the managing director of the company, RBV Bubna, now joining us. Thank you so much for taking your time out and joining us here on ET Now on the phone line. Mr. Bubna, first up, let's understand the impact of West Asia conflict so far. I understand that the impact is limited because you have passed on the impact of raw material price hikes to your customers. But now going forward, do you expect raw material prices to cool down because of the developments that are happening geopolitically?
No, madam. I am expecting that the prices will still go up, but increase is not going to be very prohibitive or disturbing. And the industry, I'm talking about the global situation, the industry will be able to easily absorb it and pass it on to the farmers,
Okay, so that's on the impact. Mr. Bubna, talk to us about the impact that you are seeing so far from the geopolitical escalation in the Middle East. Any impact to the company's operations, margins, and more importantly, is this going to affect your FY27 growth outlook, which I believe you have pegged between 15 and 20% with margins at 35%. Any impact to any of those numbers?
No, madam. Our numbers will not be impacted. In fact, I want to just let you know, the only impact could be because of the freight charges and other delays. But our markets are mainly in Europe and America, and we are not transporting our goods, and we are sourcing the goods from China. So our goods are traveling via south of Africa, and there is not going to be much impact. There could be a slight increase on the freight rates, but which is absolutely bearable and tolerable.
How much has the increase?
As far as demand is concerned, demand is not impacted at all. The volumes are increasing.
Demand is not a concern. Volumes are increasing, and West Asia conflict has not had any impact on your pricing, is what you're saying. But Mr. Bubna, what has the impact been as far as freight cost is concerned? I understand that it is negligible, but if you can quantify that for us, and has that been passed on to the ultimate consumer?
Madam, the freight rates are just on the increase. The increase is hardly about 10, 15 or 20%. And whenever we have covered our requirements of the second quarter of 2026 also. So we will be seeing it when we go for sourcing of the third quarter. And the Chinese are also not sitting with big inventories. So the prices are going to increase. That will also include the freight. And we will be very easily pass on to our customers because our products are not freely tradable products. The customers are compelled to buy it only from the registered sources, and the registered sources are very few. So we don't have any cutthroat competition. Our competition is very minimum.
Understood, Mr. Bubna. That you're placed very well in a situation like this is what I gather from this conversation. But you did say that you're expecting... Sure. Go ahead, please.
To answer your question about our this year's performance, we still continue to hold a view about increase in the turnover by about 15 to 20% and maintaining the margins.
That sounds very optimistic, Mr. Bubna. I'm just trying to understand, since you said that China also doesn't have a lot of inventory, customers are compelled to buy, and you'll be able to pass on the price hikes. What is the quantum that you're looking at? Are you going to be passing on full 100% of the price impact that you see?
Yes, madam.
Okay. And then consequently, this will not have any impact on your volumes, right? I believe volume growth at 15% will be sustainable, or are you looking at some impact maybe on volumes?
It should be sustainable.
Okay. So sustainable over there and looking good. So on the back of all of this, Mr. Bubna, as I understand, the business is largely untainted by everything that's happening geopolitically. Are you going to be looking at increasing your capex? What are your capex plans for FY27? If you could help me with that.
Madam, our capex have been in the range of 400 to 500 crores, and there will be slight increase because of the inflation which is happening everywhere and globally. So it could be up to 500 or more than 500, but that is also totally spent from our internal generations. So we are very much prepared for it, and we will also be rewarded for the investment that we make on the registrations or capex.
Okay, so since you're telling that it will be fully funded via internal accruals, when will that happen? Is it likely to happen in the first half of FY27 itself, the entire 500 crore of capex?
No, madam. It is distributed uniformly, and the registration process is not very much predictable in terms of time and these things. So it will be there for the whole of the year, not limited to first, second or third quarters.
Understood. And Mr. Bubna, if you could give me a better insight on what the demand environment is like right now, domestic as well as the US market. If you could first help me with how much of your revenue is contributed to by the US market and what is the demand sentiment looking like right now?
Madam, our major market is in the Western Europe. Our market is more than 50% or 55% in Western Europe, and in US it's about 25 to 30%. So both these markets are not impacted by the. I mean, there's no dearth. There's no dearth of market there.
Okay, so there has been no impact of demand, whether on European demand or US market. The demand continues to remain intact, and the only minor impact is on account of freight costs. Are we getting it right?
Yes, madam.
Right. And margins outlook is also very positive. You are expecting margins to sustain going forward in FY27 with 15 to 20% revenue guidance that you have shared for FY27, correct?
Yes, madam. Yes, madam.
Right.
So far.
Okay, thank you so much for joining us here.
And you mentioned about domestic. Domestic market, I feel there could be some small issues. But since we are not, our sales in domestic market is almost less than 1%. So that is not going to affect us at all.
Right, understood. We get that point. Mr. Bubna, thank you so much for taking your time out and joining us here on ET Now, especially because we just invited you at the last minute. But thank you so much for taking your time out and joining us here today. So management clearly is very confident when it comes to guidance, and they're not expecting any impact of West Asia crisis. So that's clearly an important takeaway. But on that note, we need to slip into a very short break. More news and updates will continue on the other side.
let's keep the corporate conversations going. This time, let's talk to a management on the back of their earnings, and that's Waaree Renewable Tech. Largely mixed set of numbers coming in. The revenue has seen an uptick of more than double this time around at 1100 crore rupees. So looking very good over there. But its EBITDA margin that we're slightly concerned about, it's coming at 18.8% compared to 26.5% this time last year. So it's a fall of more than 700, in fact closer to 800 bips fall is what we're seeing in the margins. The order book looks strong. The visibility on the order book also looks strong, but it's the margin number that's making this these earnings look slightly mixed. So let's get a better sense from the management themselves on what has taken place in the quarter, and more importantly, what's the outlook for quarter one of FY27 and overall new financial year. We have Mr. Manmohan Sharma, the CFO at Waaree Renewable Tech, joining us on the show. Mr. Sharma, good morning and thanks for your time. Now let's talk about your earnings. Given the significant surge in quarter four top line and your bottom line, both on the sequential and year-on-year basis, if you could help us understand how sustainable is this high rate of growth in the immediate term, and what specific drivers will ensure that this trajectory continues well into FY27 as well.
If you see that our overall performance over last few year, in fact quarters, so we are growing company continuously, and we have doubled our revenue, and the EBITDA also we have doubled. So going forward also, with the strong unexecuted order book as of now we have, we are firm that we will be able to continue and sustain this kind of business going forward as well.
And Mr. Sharma, there has also been a significant surge in the cost of EPC contract in the quarter gone by. Can you take us through what led to that, and if the increase is reversible in the next quarter?
So if you see that my cost is also in line with the revenue, in terms it has grown in the proportionate to my revenue. So mostly what we are doing, we are whenever we are negotiating any contract, simultaneously we are also fixing our raw material or the COGS component. That also we negotiate simultaneously, so that our margin remains intact, as well as, because there could be escalations in the prices, but whenever we are doing the costing, that time we consider all kind of factors which are likely increase, inflation, etc. So those factors are considered while doing the costing, or therefore we keep this kind of margin. So we consider all kind of facts in this.
Okay, understood. Mr. Sharma, if you could also give us an insight on how your contracts are structured, because we are seeing increase in the raw material costs. If you could help us, if this increase in raw material costs will get passed on to the final consumer basis, how the contracts are structured?
So mostly our contracts are the fixed price contracts, unless there is a change in the design or the scope of the work, where we have to do extra work, or maybe some design change, we will be doing extra work. So those things are where there is a upside on the revenue side also. As far as the costs are concerned, it is not a pass through. We have the fixed price contract, and over a period of time we have to execute those contracts. But the how we are functioning is like the strong order book which we carry, and the cost optimization exercise which we keeps on doing on a quarter-on-quarter basis, and it's a routine. So with the tight financing control and monitoring these projects on a real-time basis, definitely we are able to achieve and control our costs.
And Mr. Sharma, company had guided for EBITDA margin levels of more than 15%. The company has successfully been able to meet this guidance, but if you look at the numbers on a sequential and on a year-on-year basis, margins have contracted. What are the key drivers behind this contraction in margins YOY, and what is the outlook going forward when it comes to margins?
Actually, the margin for the quarterly basis is based on which contract we are executing on the quarterly basis, means which type of contract work which we are doing for the specific customer requirement. So that is the key for that particular quarter. But if we see the overall for the full financial year, we have achieved more than 19% of EBITDA margin and revenue of 3,331 crores. So So on an overall basis, if we see, and if you compare with my last quarter also of December 25, we have improved slightly on from the last quarter. But overall basis, if you see that we have maintained more than 19% EBITDA margin.
Understood, sir. And is it the case that the large-scale utility projects have lower margins? Is that why the margins have been impacted this time?
No, it's depend on what kind of contract with geographically as well as scale what we are doing as of now. But more or less, we try to maintain this same kind of margin in various contracts. It may be very few basis point here and there, but mostly we are like when we start, we do some costing and risk reward metrics. Then going forward also, we keep on reviewing all these factor parameters on the monthly or even maybe a daily, means a weekly basis. So any kind of change, any kind of situational change, maybe where this margin or maybe the costing comes into the play. So with all tight financial controlling and real-time monitoring of these projects, we are able to achieve this margin.
Right, so that's as far as margins are concerned. But Mr. Sharma, also wanted your thoughts on the current order book position and the timeline of execution. Given the order book that you're sitting with, what will the timeline look like?
Whatever the 2.8 gigawatt of unexecuted order we have as of now, so it's to be executed over next 12 to 15 months. So and whatever order we are getting, because it's now we are the scale has gone up. We are doing 2 gigawatt of order, 1 gigawatt of order. So scale has gone up. So it takes around 12 to 15 months for us to complete these kind of orders. Moreover, this for the going quarters also, if you see the this progress over a quarter basis, will try to maintain the same kind of like growth going forward as well. But it's like depend upon how much order we get during this financial year, this running financial year.
Okay, and on that note, can you throw some light on your prospective order pipeline?
If you see that if you see that we are already doing 36 gigawatt of following the order pipeline, 36 gigawatt of order pipeline, and these are some of them are tender, some of them are international also. So we are actively looking any kind of order which are available from the tender or maybe from the domestic bilateral contract. These kind of the pipeline, any opportunity if at all we get in the international market also, that also we are actively exploring. So we at this stage it is difficult to comment how much order will come from which sector, segment and geography. Let us see during this financial year.
And Mr. Sharma, are there any supply chain bottlenecks for critical components, especially modules and trackers, that could delay project commissioning in the first half of FY27?
No, actually, if you see that we are, as of now, we are totally dependent on, we are the domestic EPC company, and our sourcing is also fully dependent on the domestic supply chain. So as of now, we are doing that only because entire is domestic orders and supply chain is also domestically, unless some component which are specific requirement of the customer to be imported. So and further, whenever we move to the, let us say, if at all into the international market, that time we will see that if the supply chain, how we will be able to manage that also. We have plans, but let's see, sir.
Okay, and lastly, if you could help us understand your plans going ahead, because the company has further expanded into the BESS and data center segments. How does the growth prospect look in these segments? If you could just throw some color over there.
As of now, the company is into 3 segments that I mentioned. That one is EPC, other one is O&M, and then our own IPP project. So these are the 2-3 revenue stream for this company as of now. But definitely we are actively looking any kind of opportunity in terms of EPC. Of the best EPC as of now we are doing, maybe relatively not that significant as compared to my EPC solar power, but that also we are undertaking, and we are actively doing this base orders also, as well as any kind of this data center opportunity. So that also we are looking very actively. So probably during this financial year, I will be able to give you some detail of that.
Okay, so that's as far as the outlook is concerned. But Mr. Sharma, thank you so much for taking your time out and joining us here on ET Now and helping us understand what Q4 looked like and what the outlook is for the first half of FY27. Thanks so much for joining us today. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Bye now, sell now. We'll come up next.